All right. So I think we can actually just start. And then, guys, I'll add them as we go. Yeah, the earlier we start, the better. Otherwise, it's really, truly an honor to see you again, Tom. It's always a pleasure
Thanks.
to have you on our trading lounge. Always, we learn every new things whenever we have you on board. And I can see from your library, you have lots of books. So we are going to get a lot of wealth of information from your trading experience. Now that you're retired, but you're still active in the industry. So yeah, so all right. So I think just to get started, guys, just to remind you that you can type in your questions as we go, and then Tom will be able to answer them during the Q&A session. Yeah. So Tom, maybe you can just refresh our memories on I think when you programmed your own trading style, you managed to hire at least three programmers to work on that. So maybe you can tell us more about traders being confident in their own trading style, which at the same time also closely mirrors their trading personality and the risk profile, and how you were able to do that for yourself.
Well, first, I started programming it myself. There wasn't any other programmers, it was me. I have an engineering degree, so I was comfortable with computers. And what I ended up doing way, way back when was programming in something called Fox Pro or Fox Base, I guess it was first called. And then it graduated to Fox Pro. And then Microsoft bought them out eventually, and they discontinued Fox Pro, sadly. And it was one of the many reasons I closed the firm because all my language would have had to been redone in a new language, and it would have been a lot of money. And I really didn't, at that point, I thought, it's time to retire. That was just one of many reasons, but it certainly did add to the list of reasons to shut down the company and just enjoy life a bit. Um, so what you end up with to get your confidence up as a trader, a systematic trader, the first thing you have to do is to understand what your strategy is attempting to do, say manually. So if you were on a screen and you were looking at a chart and you said, okay, I'm going to buy this next breakout above this previous high of some sort. How do I define that mathematically? How do I tell a computer that is absolutely stupid? A computer has no brains whatsoever. You have to give it every minutia of how to do what it does. And if you're at all off in that, the computer will be off and you will not have a perfect trading strategy. So what you have to do is to realize what you're trying to do. Then you have to then explain step by step in very small steps to the computer how it looks at the data and interprets it like you would as a human looking at a chart. So you have to define what is the previous maximum high and how many days back are you going? If you're using a Danshin channel, what's your look back days? So you've got this database of prices, open, high, low, close maybe with dates, and you've got to be able to program it to jump back 21 days and then go through all the data and look for the highest high and the lowest low and then keep those as variables, make decisions with them, maybe put your stop order one tick above that. So it's a breakout. Once you get that all defined, then the next step is to gain confidence is to simply run it through some historical data. So that's pretty easy. You just, attach it to the database and you run and you print out the results of every day and where the buy sell signals would be. The next step is tedious, and I recommend everybody do it to establish the maximum amount of confidence in what you're doing. And that's to pull out the printouts of what you do or put it on your screen if you don't want to print it out because it could be a lot of paper. And to simply go through day by day and analyze, is this computer program doing exactly what you asked it to do in every single day? And that could be years of data and it could take you hours. So, get yourself a nice cold drink and get everything queued up and put on some soft music and just immerse yourself in it. When you get all done with that, if you haven't found a mistake, then the program you're confident is actually doing what you asked it to do. And at that point, you turn it into a once a day decision maker and you bring in the next piece of data and you run the program against it and it maybe generates your orders for today, let's say. And you have confidence that not only do you know the program's working well with the data, but you also have confidence that in up markets, if it's supposed to make money, let's say you're a long only stock trader, if the stocks are up and you are up and your systematic trading is showing a large profit during those periods, all right, that's to be expected. If on the other hand, you have in your historical database a down period and you tend to lose money, that's also expected because you're a long only trader and it's a down market. So you now understand some of the risks with your strategy, but you're confident that it did what it was supposed to do. It should have lost money probably, and it did lose money. So, okay, that's good. And how about in sideways? How much did you get chopped? Did you buy in and then sell out and buy in and sell out? Would you take a drawdown there? Maybe. Maybe on wide swings you get hit, and maybe on small swings you get ignored and you just stay with your position. So you're trying to get a sense of how does this thing act against various forms of historical data. You are not, and I repeat, not just looking at some summary page that says you made 21.2% average compound growth rate with a 15% drawdown, and you don't even bother checking it because when you do that, there could be all sorts of errors in there for starters that you didn't find. So now you don't have as much confidence. And the second thing, and more importantly, you don't know how your strategy does during different types of periods in the detail. And that's where you gain your confidence. So it's well worth a few hours of tedious sitting there and going through day by day and or data point by data point and figuring out, does this thing do what I actually want it to do? Once you have it to the extent where you're confident, then you've got yourself a tool to drastically reduce the time you spend in front of a screen or dealing with all the different little noise and news and all the other stuff that can distract a trader and just make you nervous and make you overly enthusiastic or greedy or depressed or nervous or any one of a million mental states, many of which are not conducive to good trading. So I recommend the tedious approach to historical simulations and stay away from the one page set of statistics and return to risk ratios, Sharpe ratios, and all that stuff. And just to look at that one page and say, yeah, this looks good, I'm going to trade it. Yeah, no. So along the way, you'll regret that.
All right. And now, because you mentioned you had at least some engineering, mechanical engineering background that helped you
No, it
with
was chemical.
chemical engineering background. So I believe the statistical analysis that you were doing and the data and everything really helped you also just confirm your systematic way of trading. So would you say trading is an art or a science, and why would you support either or? Yeah.
It's both. I would call it both. The art would come from the human being, the trader, creating the trading strategy concept. That would be something a computer cannot do. It could over optimize, use AI, whatever it wants, but it's going to be looking at history, not the future. It's not going to be able to accurately predict the future, and it's going to just crunch a bunch of data and give you the best answer, but the best answer will be, in all likelihood, very non-robust. The art comes from a seasoned trader looking at markets and deciding there's these types of conditions that come together to create a good setup for a good trade. When you have something like that, where you have a setup, let's say, occurring, and you see that as a human being, the artsy side of a trader can say, okay, well, I've seen this pattern before, I've seen this setup before, whatever technique you're using, it makes no difference. But you now are starting to see that you do the same things over and over again. And as soon as you see that, this then becomes more the science of it, is to take the art that you've sort of figured out, turn that into a reproducible decision-making process that finds that situation over and over again and spits out orders for you. So the goal is to take it from the art and turn it into science. And so I'd say it's a little bit of both if you want to be a systematic trader. If you want to be just an art trader and make it up as you go, I think you put a lot of stress on yourself, you suck up a lot of time, and I think human beings make mistakes. I've made tons of mistakes doing human trades over the years. And I tell you what, my computers make a lot less mistakes than I do. So once I try to get it to the point where it's reproducible and I can turn it over to the computers, then if you feed it accurate data, you're going to get accurate orders. You're going to get those orders transmitted accurately, and you've drastically reduced the error rate on the whole process. So the engineer in me says, first, use your brain and your art and your ability to do things that a computer can't do by thinking long term about what is it I want to accomplish here. And that's where the art comes in, and then turn it into science after that.
Yeah, and I remember when we were doing first basic class for computers, there's this unit that we were doing, and there was like garbage in, garbage out, like the computer just produces what you're saying, it does what you've told it to do. So maybe you can tell us when you're executing your buy or sell orders, do you use tight stops or do you at some point trail your stops when it comes to your risk exposure and management?
The I think on stop orders, since I really don't love sitting in front of a computer all day, I like doing other things. If I have stops, they're set in different areas for any one of the strategies that I would have. So that goes back to the art side, where you decide, how do you want to trade this? Do you want to trade, you've got a Donchian channel and there's a high and a low, and you want to put it one tick above that, or do you want to put it two or three ticks above it? It's up to each trader to decide based on what they're observing and how they normally would trade as a human being, to what to tell the computer to do. If the computer is mindless, if you want to trade three ticks above the Donchian high channel line and get a buy, all right, then that's fine. That's what the computer will do. If you want to do it one tick above or on the Donchian, you can do that. If you want to do some kind of a counter trend trading where you take your Donchians and say that's the outside range, as soon as it gets to 90% level of that outside range, so in other words, it's coming up and it's 90% of the way to the top of the range, then you figure, okay, it's overbought. I want to short it now with a stop above the high side of the range. Okay, now you have a mean reversion strategy you just created. All of these types of things are ways of trading that can make sense to the trader. You have to then translate that over to the computer, and your stops and your limit orders and all that stuff will be set by the artsy side of the trader and how you think you want that computer to just take over. So the way I look at it is the computer becomes simply a tool for the hopefully the brilliant trader to come up with the concept and then just instruct the computer to do the dirty work and kind of take care of the, crunching a lot of data accurately.
All right. And now that we're talking about systematic trading, when it comes to your trading strategy, do you at some point take a step back and uh, observe and maybe tweak it to accommodate the variations in the market? So, for instance, if we do have geopolitical events like just the recently concluded US election and the swearing in of Trump,
Mhm.
so do you do that, or you just strictly stick to your price action trading, and then you don't really do a lot of changes when it comes to the shifting trends in the markets?
I don't make a lot of changes. I would argue that you could if you wanted to. Again, it comes down to the trader. If you were trading a very short-term strategy and it was not a big deal for you to just say, okay, I know there's going to be this big geopolitical event, it's been announced, or I just suspect it's going to happen. I'm just going to close down on Friday for the long weekend, 3-day weekend, and start it back up on Tuesday. If that's easy enough to do and that's the way you normally trade, you can instruct the computer to do that, build the software so that we liquidate on Friday afternoon, a bunch of market orders go in, and Tuesday morning, a bunch of market orders come in and the portfolio's back. Certainly that'd be a way to do it. You can also, what I do is sort of a, I don't know how you could describe this except that I use volatility adjusting. So in geopolitical events where there's wider volatility, and certainly the last month's been a good example where all of the types of indicators I use are either based on standard deviations or ranges or average true ranges. The various indicators all will get wider. So if this is a normal market and this is a quiet market and this is a volatile market, what ends up happening is all my indicators in geopolitically volatile periods just stretch themselves out. So my buy and sells get a lot farther away from each other, and that just adjusts my position sizes downward proportionally. So if I'm trading, I don't know, 5 contracts here and I'm trading 7 or 10 here, I might be trading 3 or 2 there. And it's the same amount of risk to my equity. I just trade less contracts. So it adjusts automatically. So I don't tend to agonize over, oh my gosh, what's the Federal Reserve going to do on Thursday? Or what's the CPI coming out in the US Consumer Price Index inflation reading going to be next week? Or what's NVIDIA earnings call going to be after the close, or any of these other things that a lot of traders seem to worry about a lot. I just let the indicators adjust automatically with the volatility that the market is showing, and that automatically adjusts my positions, and it allows me to, have a reasonably similar risk at all times, no matter what the markets are doing.
All right. And if someone wants to automate their trading system like you did, and they do not have a software engineering or mechanical or any coding background, what would you advise them to do? Should they hire someone to code it for them, or what would you tell them?
All right, there's a couple of different ways that you could go, multiple. The first one is to ask yourself, all right, I don't know anything about programming, but you need to answer this question. Do you want to know something about programming? Because online, there are scores and scores of $15, $10, $20 electronic courses in C Sharp and in SQL databases and in all sorts of web-based um, code to create browser screens and all that stuff. So I was not born with a knowledge of computer programming. It is a learnable skill. So If you choose and you say, well, I'm intrigued by this, I'd like to control my own destiny and I want to do my own program so I feel really comfortable. I know what happened. And I really don't want to get involved with another person and have to pay them or, find them or anything. Okay. So you just learn to do it yourself and you start simple and you start building. You build one small block. Like for instance, I've talked a lot about position sizing over the years. I've wrote a book on the topic actually. And it's a simple math, and it's something that could be done on a spreadsheet really easily. If you knew your buy point and your sell point, and you know your risk, and then you know your equity on the top of the trading screen, this divided by that gives you your percent for one unit of either one share or one contract in the futures or $1 million in the case of Forex or whatever you want to do for your number. But it's the one that you're worried about. And when you get that, you could just put those numbers into your spreadsheet and have it calculate how much the order should be. That would be an extremely simple form of automation. Now, if you can take your trading screen or the information coming in on a daily basis and plug those numbers into a simple little program and have it then spit out how many should you do, you've just automated one small block of your trading program. Now you ask yourself, all right, now I got this automated. Now, if I could just have the computer not only know how many I'm going to do, but tell me where the order is supposed to be put. And then you start working on that problem and doing the programming. And pretty soon these blocks start tying together into a longer program. They're pulling in the data, they're checking the data, they're using the data to apply it to indicators. The indicators are giving you your buy sell points. Buy sell points are giving you your risk per contract. That's telling you with your position sizing how many you should do. You create the text for the order. You queue up, you're connected to the trading workstation of some sort, and maybe you can even ship if they have API or automated program interface with your broker. You might actually be able to have your computer talk to their computer and ship the orders to them in their live. And so you've just taken this flow from data coming in to orders going out, and you didn't touch it. And you can build that yourself. So that's path one.
Mm-hmm.
So then let's say the trader says, I'm retired and I don't know, I was a doctor all my life or something. I know nothing about computers. I really don't want to do that. I want to do work with somebody else. So you got to ask yourself who that person is and what access do you have to them? Could be, I don't know, a son that happened to go to college or something and knows something about programming, and he might be interested in joining the effort. It could be somebody from a local college or a community college or a university or something that knows something about programming. It could be even there's firms now that will have contract help. One time I had a situation where I was trying to automate one module of something and it was very definable. So just for the heck of it, I put it out on a request board for contract computer help. And there's several of these types of things out there. You'd have to search them out, but basically, in essence, you put out a set of specs of what you expect a person to do, create what language, how it's going to happen, and when you would like it done. And you get contractors that are sometimes working part-time, sometimes they do it full-time. They will actually bid on the project and say, I'll do it for this price, I'll do it for this price. You can review these and figure out which one you want to hire. And usually you put maybe half the money down initially and maybe half upon completion of the project and your approval of it. And as a guy who hires the contractors, you get rated for how reliable you are at following through and paying and all that. And as providers of the uh, computer code, they also get their star ratings on how they do. And you find some people that you like to work with. Maybe you work with them, repeated. You go back to them and build different blocks and start tying them together. So you can do it that way. The final way is to actually take on somebody as either a partner or an employee or something, depending on what you want to do. And then you're just sitting there, giving them instructions on what needs to happen next so you can automate this thing. And so there's different levels of it. And one thing that I'll add that I just did this last week
Mhm.
as I have not tested it. I don't know whether this could be done, but it looks very interesting. I was on X.com and Grok 3 just came out. There was a lot of announcements about Grok 3 being the latest, greatest artificial intelligence. And there's a deep think mode that will take a lot longer to go through its AI database and figure things out. So I asked it, I said, could you create C# code that would take date, open, high, low, close data and using I think I said Keltner band, it might have been a Donchian band, I think, indicator, spit out the high-low channels for a Donchian channel on that data. And it took about 33 seconds, and there was a whole bunch of C# code. Now, I read through it real quickly. I'm not a C# expert. However, I could understand what it was doing. I mean, from my computer background, just knowing basic language, Fox Pro, and understanding the typical logic flow of a computer program, it was close enough I really did understand what they were doing all the way down the way, and it looked okay to me. Now, if it could just generate that for free, and if I could then ask it to do position sizing by describing what I want from position sizing and have those two married together and have another one. I also did another query. I said, hey, Grok, I work with interactive brokers and they have an API. Are you familiar with that? And could you generate code that would allow programs at my place to communicate with IB's trading platforms? And the answer was, oh, yes, I'm very aware of Interactive Brokers API and could write that code for you. That was the answer. Now, I didn't try it, but you start thinking about this, and if you didn't know a lot about programming and you had Grok at your command, you might be able to block together all the different little pieces and have Grok sort of attach these together. You might end up being able to automate it yourself using artificial intelligence. And if you can't do it today, I gotta believe in the next 6 to 12 months, you'll probably be able to do that a lot easier. It's
All right.
it's just a week or two uh, old, so who knows how Grok is
Yeah.
going to learn how to do things better. And but other AIs are out there, ChatGPT, all these others are also trying to learn all this stuff and be useful. So that'd be a fourth approach that could be available in the near future.
All right, thank you for that, Tom. I'm almost coming to the end of my questions because I'd like you in the second link to share your screen and maybe just take us through your most recent trades that you have been trading. But before we go to that section, I would like guys to note that I've sent you a second link because this might expire in like 7 minutes. So you can click on the second link. That's where we will come and do the Q&A. So yeah, before we go to the share screen chat by Tom, maybe you can tell us, now that I kind of like Googled your age and I see you're over 70. So would you say,
72.
yeah, 72, it's really impressive. So would you say that once a trader, you're always a trader? And what is your tip on longevity in trading? We want to grow young as you are or old as you are and still be active in the markets.
And to stay in shape, I work out a bit and try to watch my weight this morning was 3 pounds difference than where I was playing basketball, fast break basketball in college 50 years ago. That's pretty good.
All
So
right.
I've stayed in shape.
So
Do you want me to go to the other link now then?
No, we still have a couple of minutes.
Okay.
So when the trading bug hits you, do you at some point feel like I'm done with the trading, or is it for you, it's something that you wake up and do every day because you love doing it, not because it's like a duty
You
or
know,
a pressure?
trading is like some people like to do crossword puzzles. I like to trade.
Mhm.
It's a brain tease. You never can do it perfectly. Kind of like why I like golf. You can never shoot a perfect score in golf. You can only try to get a little better at it, and you learn things along the way. And it's all about the learning and the journey. You never reach the destination. So you never are a perfect trader. You always can look at what you did and say, "Wow, that was a tough day. How did that happen?" And am I inspired to do anything differently now because of that day? Did I learn anything at the tuition at the College of Trading? I paid my tuition. It's a bad day. I've lost money. Is there something about the math that I use that could be modified to pick that up a little better and to deal with it, or made it make profit? Maybe not only just reduce risk, but how could I exploit that kind of action? Maybe if you have a very volatile outside day and you lose money on trend following, how about if you had some kind of a option spread that was sort of like out of the money calls and puts that would go explode when the market had a big outside day in a geopolitical event? You'd pick up whichever side was profitable, the other side would go to zero, and you would make a lot of money to offset losses in, say, trend following models. So I think that it's more the brain tease that keeps you young. I think it helps. They say that work in your brain, like I sing in two choirs. It's fantastically important to keep your brain active. I think, as I've had many friends and even a mother recently pass away due to dementia. And it's a sad way to go. And I try to keep my brain as sharp as I can by doing different tests of it. And the brain tease of trading is certainly one of them. Singing is another, golf is another. Just trying to, design my own landscaping around my property and think about where does this plant need to go, or what am I going to do with that little space over there to make it look beautiful? What size plant? What's the sun conditions? What's the soil? How do I water it? Those types of things. It keeps your mind active. And so I like that about trading. You never master it.
All right. And then you're an author of The All-Weather Trader. I think that's
Mhm.
that's your most recent publication. Based on your experience now as a grandpa, what would you tell all of us? We also have a variety in our trading community. You can see we have old people, we have young people, we have middle-aged people. So surviving through the seasonal, the markets keep on changing. Like the same market that was there 1 year ago is not the same market. So how do we become traders that are successful in all the in, kind of like a weather situation changes in the market? Yeah.
Well, in simple terms, there's up, down, sideways, and sort of low volatility and high volatility, and that pretty much covers most of it. Um, and I think that what you have to do is think through what kind of strategy would you need to exploit those various conditions. If a market doesn't go anywhere and it's kind of normal volatility or low volatility, it's going to be really hard to make much money because markets aren't moving, and you have to buy low, sell high, or sell high, buy low to make any profit. So high volatility is high potential risk, but it's also a high potential opportunity. And certainly trending markets up or down have a lot of potential. Sideways, not so much. And I think the common thread of what I have tended to do over the years is just to try to ask yourself, how do I try to exploit each one of those conditions? And having one particular method that is going to exploit all of those positions sort of is illogical if you think about it, because if you're trying to pick up a huge trend to the upside, a trend following model might do that. A counter trend trading, probably you'd be fighting it all the time.
Can we,
So,
yeah, can we go
but
to the second link? Because I see we have like 30 seconds. Let's just
okay,
go to the second link. Guys, I've sent you the link on the chat section. We can just copy
okay,
paste it on your browser. Yeah, yeah, yeah.
there you
Welcome
are.
back, guys. Welcome back. Tom, I think you can now share your screen. You can take us through your most recent trades. Um, yeah,
Well, let's see. If I share this and I try to show you that, there's just an example of a trade. Not particularly handpicked. I just the first one that came to mind. Can you see the Japanese? Or wait, this is yeah, this is actually coffee that's here, and these are Danshins, I believe. Let's see, what are they? Yeah, Danshin 21 days. So that would be the indicator used. When you and you can see my cursor right
yeah.
there. Well, the Danshin gets broken right where my cursor is here. We can actually put a little arrow there if we want. Let's see, solid arrow, boom, right there. So that's where you buy in. And with the 21-day Danshin, you're still in. So because that's such a long period of time, you probably actually rolled it from one contract to another for several times. If we want to do something else like just a very large Standard& Poor's 500 index, you're going to see a little more chop, but there's a nice run that was through the election in the States. But since then, it's gotten down a little bit. So there was some nervousness there. It tried to rally, and now it's just breaking down again. So lately, the stock market in the US at least is kind of on the downswing, and it's now broken through right at this point. And it do a solid arrow, boom, right there. That's, so it's on the sell side now. So, whether it carries down, I don't know. I don't ever predict. I simply say, okay, if it's down direction and this is my indicator I'm using for this particular strategy, then I go short. And I do this across, I don't know, 30 plus markets. And they range from debt instruments to softs, which would be things like coffee, orange juice, sugar, cocoa, lots of different types of softs, energy, crude oil, unleaded gas, natural gas, things like precious metals like gold, silver, platinum, uh, copper. It's not precious, but it's metal. And oh gosh, what else? Meats. So live cattle, lean hogs, aluminum, which is a industrial metal. There's lots of trends out there, and my job as a trader, in my view, the way I look at it, is to have a lot of different potential markets I'm looking at, and whichever one goes into a new trend, up or down, to try to jump on that trend and find the next big move in all of these markets. I don't know whether it's going to be aluminum or the S&Ps or crude oil. Something is going to get out of whack and go crazy. That's the one I want to be in on. So I have to put out a lot of orders and try to get on the next trend. And then if they don't go into a trend, get out quickly and preserve my assets. And if it does go into a big trend, to ride that trend like I showed you with the coffee trade, uh, as long as I can, you know. You get a trade that goes like this, And you start saying to yourself, wow, that's pretty easy. I do a trade around November and I'm still in. That's not exactly straining anybody.
All right.
So
Could you take us through a Forex chart that you have traded maybe recently?
Forex, let's see, how about JPY? So this has been to the downside. It's not this is sketchy data because of I used an actual contract month. I didn't use let me see if they have well, let me see if I go to Euro. Maybe they have yeah, here we go. That'd be a more of a clear chart. So here's a situation with the Euro. The dollar was getting really strong going into the election, and the Euro hit the skids right around in October someplace. And look what it did. And I just stayed short the whole time and just recently got long and I am still long. So I got long right in here. Where is it? Solid arrow, boom, right. It'd be on the open right there.
All right.
Pretty easy. And
Yeah.
you notice what I was saying about position sizing, you can see here as an example. Do you see the distance between, let's see, vertical line? We'll go like right here. Do you see how if I do the distance between here and here versus the distance between vertical line like right here? You see the distance between here and here, it's very, very great. There's huge volatility as this thing's falling apart. Over here, it's starting to go sideways a little bit more, and notice how the lines are coming together. That's what I talked about with the position sizing. I'm going to be putting on bigger positions during this type of period than I am during the very wide periods. That's when I'm going to keep my position sizes smaller because you've got very large volatility. Even though it's going in my direction, I've made a lot of money. I don't know what's coming next, and the market's acting pretty fast. So I just back off and try to keep my positions comfortable. It seems like we're in the middle of that right around now. It's kind of trying to make up its mind. And if anything, the lines are getting closer to each other. So my position sizing, as this compressed down and got closer and closer, I would have bigger and bigger position sizes in future trades.
All right.
That's kind of the way.
All right.
Does that
At
make
least,
sense?
yeah, makes sense. At least we've gotten some idea into your trading process. Now, there were some questions that had come in from the trading community, from the members. So I'm just gonna ask them out as we wait for people to type in more questions. Um,
Okay.
yeah, so there's one trader who asked me to ask you if you traded through the US election. And if you did, how different are the markets now that Trump is the president and his friends, such as like Elon Musk and most of the he has like corporate backing, corporate America. So we have people in the New York, people in Silicon Valley backing his leadership. Is there any changes that we expect in terms of volatility, and has that significantly affected your personal trading as well?
Yes, I traded through the election. That wasn't any problem at all. What was my worst day in a long time was when Trump over the weekend threatened to put tariffs on Mexico and Canada. And then by Monday, Mexico and Canada had sort of caved and said, okay, we'll do what you're asking us to do, take the tariffs off. And the markets had just had one of the biggest outside days across almost everything I trade. I mean, for sure, stocks and bonds, but there was precious metals and in currencies and everything else went nuts. and I got hit on both sides of the trades and got whipsawed quite a bit. So that was the toughest day for me. It wasn't the election at all. But yeah, I trade. What I do is I just try to give it enough room with the volatility in the indicators, just like I pointed out on this chart. And I allow it through that. I allow it to, um, you know, just let's see, get this out of here. Um, what I allow it to do is to just have more room when there's a lot of volatility. And I would say this, that lately, because of so many actions by Trump and executive orders and having Doge and Elon Musk going through the government and finding waste and fraud and everything else in the US, I think the US taxpayers are extremely happy with it on average. I think there's a few disgruntled, and you wonder whether they're getting a piece of the fraud. But I think things are going along just fine. I think the arguments that he's not acting in accordance with our Constitution are very, very malicious and false. And I think he's doing exactly what he said he was going to do when he ran for election. And so there's no surprises to me. Uh, Here's a cocoa chart, by the way. You see how it's very skinny here and nobody cares, but then you get a big run in cocoa, and look how wide the lines get. And so you buy in back around in this area as it breaks the line, and enjoy the ride.
Enjoy the ride,
Um,
indeed.
yeah. So so the answer to the question is, as world events and as Trump, I think all the things that Trump is doing and the government is doing in the US will benefit the US greatly and the US markets probably over the long run. Over the short run, there could be some disruptions due to all the tariffs. Trump is now asking for reciprocal tariffs. So if for us to sell a Ford inside Germany, it costs 10%. And if it costs 2.5% for a BMW to arrive in the US, he's just saying, well, let's either make it 10 or let's make it 2.5, or if you want to, let's eliminate it altogether, which would be the best of all worlds. And he's putting the edict out there, and then he's letting the other country respond. He is not unilaterally making the decision. He's just saying, if you want to keep it at 10%, we'll put it at 10%. Now your BMWs go from, 80, 90,000 US to 100 and something thousand US. If you want to do that, it's your decision. And I think what you're finding is a lot of countries are saying, oh, geez, like, yeah, we've been kind of not even with the US. So maybe we ought to figure out how to get to the best place for both of our countries. And I think that's what Trump is pointing out, is a lot of the rest of the world has taken advantage of the wealth of the US and the success of the US, but they don't want to adopt a lot of the things that the US figured out about their economy, the freer market, the entrepreneurship of businessmen and women to go out and start new entities that become, billion-dollar empires. And I think you can do that a lot easier in the US than you can in a lot of other places in the world. And that wealth has been kind of squandered over time, decade by decade. And we got to the point where, hey, the US has got 36 trillion in debt. We have about a 20 something trillion GDP. And so our debt is getting in excess of 1.2 times our GDP. If you don't watch it, you get into the region whereby you get nervous about a death spiral with the debt. And I don't think anybody wants the US to get into that, because it would kind of really spill over into the rest of the world in a big way. And you'd have probably a worldwide depression. So I think Trump's pulling us back from the brink, and he may be sort of pulling the world back from the brink at the same time. And a lot of tough decisions are going to have to be made. But I think over the short run, making those might be a little bit uneasy for the markets and all that. But I think in the end, we'll probably come out on the, as he says, in the golden age. So I'm looking forward to that. I'm in my golden years, so having the golden age during my golden years would be great for me.
All right. And now, Tom, as we conclude, and guys, I want you to ask questions. What can you, I can see like you have a very wide library. Now, besides the takeaways that we can get from your book, The All-Weather Trader, which other book
Mhm.
would, or rather, which would be your best pick for 2025? And this now also ties in with what would be your best trading tip for all types of traders?
All types of traders, my best advice to everyone is all the studies I've ever done using numbers on trading strategies combined together with position sizing strategies shows me that the largest effect, first of all, on your profits is selecting the markets you trade. So you want to try to select markets that you feel have the room and the ability to move a great deal. So, for example, if you're thinking of trading corn in the U.S. and you realize that the U.S. government uses corn and subsidizes corn for use in ethanol. So there's sort of a little bit of a government interaction in there. So corn is not as free to move freely as, say, I don't know, gold, for instance. And you might want to consider trading gold as a freer market than trading corn. That would be an example. So the first thing is to think about your markets. And trading diverse markets gives you more ability, if you have the ability to trade diverse markets, to find the market that's going to move next. And you don't know which one it's going to be ahead of time. So diversifying your portfolio into a lot of things helps. The second most important thing I would give you as a tip is to think about your position sizing. And the reason I say that is the leverage you put into your account either increases your return or increases your chance of risk of ruin, or makes the account so boring that you would be bored to death and you would never make any money. You have to find for each trader the sweet spot that allows you to make the money that you're trying to make while taking a risk that you're able to stand and withstand mentally and physically in terms of dollars that you have in the account. The last thing you should worry about is where to get in, where to get out, because as I pointed out with this chart I have, I got the euro back on here because I just got a confirm that came through while I was talking, and I was curious what the euro was doing. The reason I got that trade was it exceeded this bottom where I have the cursor right now, and I had one of my strategies had a stop order right there, and it just got executed. So you witnessed a trade live.
Mm.
I'll draw the horizontal line. You can see this is where the stop was, and you can see where it's trading right now. Is just a little through there. So I just went short the euro on that particular strategy. On this one that I have with the green and red lines, that's a longer term one. I have 7 that I trade. Um, but the point I make about the strategy is this. I have actually taken, for instance, trend following models, 5 different ones I remember one time, and I put a chart of crude oil up for someone, and I applied those 5 different trend following models, all with a 21-day parameter, to the same chart. And the buy signals on a big long trade of crude oil to the upside were all within 24 hours of each other. And when you think about what you're trying to pick up, which is this major move that, crude oil going from 40 to 80, it doesn't make any difference if you miss it by a day. It's the least important thing that you need to worry about, but it's what all traders seem obsessed with worrying about. They want to know the fancy indicator or the best way. I should be long gold for 2025 or something like that. All you got to do is put gold up there, put a reasonable indicator against it, and it's going to give you the trend one way or the other. Then the harder part is to figure out how much of it you're going to buy that makes sense for your portfolio. And before that, you got to actually be trading gold. So you got to make the decision to be watching the gold market and deciding, okay, this is one of the places I'm going to take chances in the future. But you might put together a portfolio of 10 things or 5 things, and you might have like a metal, an energy, I don't know, some kind of a debt instrument, maybe a stock indices, something. Get as much diversification as you can. If you trade 5 different tech stocks, you're not going to get a lot of diversification. Tech's either going to go up that day, maybe down that day. You might get one of those tech stocks to go up while the 4 of them went down, but it's rare, and you're going to get a lot of risk, and you're going to get very little diversification. They'll all move the same. And so I don't think that's the way to survive long term in trading. And I'm past 50 years in this thing. And so I'm speaking from experience of how to try to stay alive through some pretty scary moments, the 87 crash, the war breaking out in Iraq, the US tariff situation day, and the elections, and a few Fed Reserve remarks along the way, and just a lot of other world events that have come in, wars breaking out. And, to survive all of that requires a lot of diversification. And, if you're only trading small amounts of money, it's hard to get that. But you got to try. And you got to do as much as you can do, realizing your limitations. I can't trade 200 things because I don't have enough money. And I'm trading a pretty good size account here. So there's a limit. Everybody has their limit on how much they can do. You have to design what you're doing for what you've got, what your skill level is, what the markets are going to be able to allow you to do. And once you have that strategy all wired out, then execute it flawlessly.
All right. Maurice, do you have any questions from the attendees or questions that came in previously that you would like to ask Tom?
No,
Well
I don't
free,
have, but I'm
guys.
following. I'm just following. Thank you.
Okay. All right, guys. We're still taking your questions. I think the last question from my side, Tom, would be, I see you also do trading workshops here and there sometimes, and we were planning to have more physical meetups with our educators, our global educators like yourself. So if we get like a good partnership and a good sponsor broker, would you be open to come to Nairobi and do like a 1 week seminar sort of trading workshop if your calendar is open? I know you're over 72, but you're still young.
And I'm also
Coffee.
6'3", and I don't fit in airplane seats very well. So I hate to travel. So the answer is I don't mind doing various things like this telecommunication wise, but at 72, there's several things that go on. The older you get, the harder jet lag is. So we just did a trip to the Seychelles and got on a cruise that went to Singapore. And boy, the jet lag hits you. And I really love being in this office right here at home. It's my favorite place in the world. And if I can get up out of this office, I'd rather go. My second favorite place is either being on the golf course nearby or in my yard out in the sun and enjoying the day. So I prefer not to do in person anything just because the travel is just kills me. And the 6'3", they've now moved those seats back. I have to go business class or
Mm.
I don't even consider taking any major trip anymore. I just can't. My knees and my legs are I can hardly walk when I get off the plane. So,
All right. But we do thank you because, I mean, the world is a global village. Thanks to the internet, we're able to actually get some free tutorials from you. Yeah, and it's also good to witness one live trade that you have executed just a couple of minutes ago. So, yeah, so guys, do you have any questions for Tom? At least today we had some good turnout from the trading community. So,
Nimefika. Acha niondoke.
all right, no worries, Afro Swing. All right, so thank you guys for tuning in. I think Tom, we'd love to have you again, of course, in the future, if your schedule is open. And today we've learned some new things that we will also apply in our own personal trading. And also maybe the last, which book would you recommend for us as we say goodbyes?
well, the all-weather trader that I wrote has three different aspects of trading that I think are important. Talks about the buy-sell engines, which everybody is always very concerned about. I think it's the least important, but it's still something that you need to have. So if you don't have one, that whole section of the book is useful. I do talk a little bit, it's an abbreviated chapter sort of what I covered in the book Successful Traders Size Their Positions. And that book covers the math behind how I do my own position sizing. So it's really simple math, add, subtract, multiply, divide, nothing specifically difficult. And it's a very inexpensive. You can go to the enjoytheride.world website and download a PDF. I think it's 60 or 80 pages or something, and it has all the formulas. And you get a PDF download and immediately have it in your possession. So that chapter is very important, talking about position sizing. Then I have a couple chapters on sort of the mental side of dealing with being a trader and how to stay in good mental states, how to be aware of when you're getting out of whack and how to correct back. So I think All Weather Trader does a little bit more of a broad cross section across the various topics of trading, where some of the other books that I know, I think Trade Your Way to Financial Freedom by Van Tharp is a good introductory book to trading. Van's no longer with us. He passed away here about a year or two ago, but he was a mental coach for traders. And that book struck me as being one of the most sensible, broad-based books on trading, covering a lot of the different topics that you need to cover to be getting into the trading situation. And so that's another one. Those two books are probably my favorites in terms of covering a lot of aspects of trading.
All right. And if guys want to buy your book, they can go to Amazon.
Oh, yeah.
And your website.
Website enjoytheride.world, not .com.
Yeah.
.world, WORLD.
Yeah.
That's the URL. And there's all sorts of free stuff for traders on there. There's all my interviews are on there that I get access to. I've got my hedging description is on there with the indicators and a description of how I do it for hedging stock portfolios. I have, what else? I have a Learn store with some books available, some videos that you can buy. There's all sorts of other helpful links that you can get. It's a variety of trader information, much of which is free, and some of it you can buy if you want. But it's worth checking out. As most traders, we get a couple thousand visitors a month, and it seems to, keep a lot of people happy out there.
All right. I'm just gonna read out comments from the attendees. So Lydia says, "Thank you very much, Tom. That was a very insightful session." Maurice says, "I've enjoyed the session with Tom. I admire his combination of experience and exposure. Thank you to you." And then Liz says, "This is deep stuff. Thank you, Sylvia, for the exposure. It's quite inspiring at your age, you're still trading." So Yeah, those are just some of the comments from our attendees. Thank you so much, Tom.
Yeah, at my age, I'm almost decrepit at this point. I'm getting old.
Yeah.
I worked out yesterday, and I can tell I worked out. I'm sore all over.
All right, all right. So yeah, Nadir, you see, you have your age mate here with you. Nadir is one of our oldest members in our trading community, from Nairobi. So it's good you guys are in the same session, so you're not alone. Yeah, yeah. All right,
Very
guys.
good,
Thank you
Nadir.
so much.
All
Tom,
right,
hats off to you, and we'll let you go for now, and then I'll send you the link to this once it's up on YouTube, and you can share to your socials as well. And to
great.
our attendees, thank you very much for your time. I hope you've learned something new today, and let's keep trading, guys. Let's keep trading. Yeah.
Okay.
All right.
All
Cheers.
right.
Bye. All
Till
right.
next time.
Till next time. Thank you.
Bye-bye.